training tonight. So now the first part we're gonna be looking at is the new Nigerian tax rules 2025, and I'm going to be explaining it to you like you're five, because basically a lot of persons don't understand what these rules entails or what these policies entail. So my goal tonight is to explain it in such a way that it's going to be simple and understandable for anyone that just come across this video. So now these changes will be coming up in 2026, and I tell you, it is very important for everyone to understand the nitty-gritty that is involved in this taxation rules, right? Because it's going to impact everybody, and whether you are online or offline, whether you're even abroad or locally, you need to understand how to manage your finances effectively so that you'll not be affected by these rules. So that's basically the reason I'm doing what I'm doing tonight. So now your bank account will report inflows. Your bank account will report inflows. So what I wrote here is, this is arguably the most impactful change set to come into effect. So it means that they're going to scrutinize your financial transactions. Do you understand? Any money that comes in. So every licensed bank in Nigeria will soon be required to automatically report the total monthly money entering your account, and this will be directed to the Federal Inland Revenue Service. So it means that every money that will be coming, or any amount of money that is coming into your bank account, every licensed bank in Nigeria will be required to report the amount of money coming in, and they're going to direct it to FIRS, which is known as Federal Inland Revenue Service. So now, why does this matter? The FIRS won't necessarily know the source of your funds, but they will see the total amount. And this creates two distinct scenarios. So it means that for somebody that is earning low and getting just simple inflows of money, like money entering into your account, FIRS is likely to overlook your account. So if you are earning very low, right, and you're just getting little amount of money coming into your accounts, they are going to overlook it. But if you are earning high and you're getting complex inflows of money entering into your account, FIRS will begin to investigate your financial patterns, and they're going to check it. They will check it. They will pay more attention to it. So this new transparency highlights why having a clear financial structure is now more important than ever. So it's very important for you to understand these things so that you won't have issues tomorrow. Now, the next thing you need to note is that FIRS, which is Federal Inland Revenue Service, now separates business money from personal money. So now there's a difference between personal money and business money. I hope you're getting it. So they've been able to distinguish the money that is coming personally to you and the one that is going into your business. So the FIRS is sharpening its focus on how income is categorized, especially when large sums of money flow into personal accounts. So what this means is that if money goes into your personal account in large volume, FIRS now assumes that what it might be business income. So when the money, let's say you are earning, you just receive 1 million naira into your account, your personal account, what they would think is it's for your business. Do you understand? And this is tantamount to you owing tax. You're going to owe tax because probably they feel that this amount of money has entered into your account and they're going to tax it. Now, you cannot claim business expenses from a personal account. Do you understand? You cannot claim business expenses from a personal account. And what this simply means is that your expenses, the amount of money you are spending, it has nothing to do with FIRS. What they are more interested in is the money that is coming into your account. So this means that if you are earning income online, your personal bank account is no longer the ideal place to receive business related funds. Are you getting it? So don't use your personal bank account to receive business funds. If you're getting value so far, I want you to drop in the comment section that you are getting it so that we can proceed further. Let me know if we are still in line. Okay, I'm getting responses. Okay, okay. All right, let's proceed further. Let's proceed further. Now, so now we are going to the third part. We're going to the third part, or yes, the third part rather, not fourth part. Now, there's a flat rate for 7% PIT for small personal earnings. And what does this mean? What does this mean? This means that for every for your personal income, money that is coming into your account, there's a simplified personal income tax rate. Do you understand? For people that are earning very low. So in this way, people can easily understand the amount of taxes that they are going to be paying for. So what does this mean in essence? So if you declared personal income, that your personal income is less than 25 million, that's 25 million per year, your personal income tax rate is a simplified 7%. Do you understand? So for people that are earning less than 25 million per year, your personal income tax is 7%. And of course, you know that they won't charge you. You will not be taxed if you are earning less than 800,000 per year. You're not going to be taxed. So this is once you start earning above 800,000 naira, that's when this taxation policy will begin to be implemented or executed against you. So now, this streamlined rate makes a well-structured salary strategy particularly effective for managing your tax obligations. It provides predictability and potential savings. And this new flat rate means that for many, strategizing how they declare their income can lead to significant tax benefits. What this simply means is that once you are earning above 800,000 naira, you're going to be charged 7%. That's just the whole grammar in this whole thing I'm talking about. Now, the next thing is for a company, a small company, right? So for somebody that is an affiliate now, maybe you're a forex trader, or I don't know what you're doing, maybe a content creator, somebody that just has a small company, right? So this is how the company's tax structure plays out. So the FIRS has implemented a tiered company tax structure based on turnover, which is highly favorable for small businesses and creators. So for example, now, if you are earning below 25 million per year, your company tax rate will be 0%. Do you get it? So if you are earning below 25 million per year in your business, and you have a company, your tax rate will be 0%. It means you will not be taxed. Now, if you are earning 25 million naira to 100 million naira per year, you're going to be taxed 20%. That's what they're going to tax you. And this is per year. It's not per month, per year, 20%. And finally, if you are earning over 100 million plus, you're going to be charged or taxed 30%. And this whole structure means that if you are earning below 25 million, your tax is 0%. So you can see the advantage of having a company. When you have a company, you are not going to go through the rigor of, for somebody that is earning less than 25 million, you're not going to be taxed. We're going further. Now, this is the next part. So we dealt with the first part one. Now we're looking at how to legally minimize taxes without being an accountant. How to legally minimize taxes without being an accountant. Now, there are three legal tools you can use significantly to reduce any tax, right? And you don't even need to have an accountant to do this for you. So the first thing is you need to separate your money correctly. You need to separate your money correctly. So you need to learn how to structure your money, right? Know how you receive and manage your funds so that it can help you cut your taxes. So for example, now somebody that has a business now, and maybe this is your business revenue. So let's talk about business revenue. You're making money from the online space, sales, you are selling a product, you are earning affiliate commissions, you're a YouTuber, or you do Forex, right? So what you need to do is to make sure that the money goes to your business account, which is your LLC, right? This is your company. Let the money, the revenue you're generating from your business, go into your business account. So the advantage here is that it allows expense claims, and I'm going to explain what expense claims mean during the as we move further, as we proceed. I will explain what it means. It also helps to reduce taxable profits and potentially 0% company tax if your turnover is less than 25 million. I've talked about this before. So that's the advantage of sending your money into your account. Now, personal salary. So let's say somebody on this call now or watching this video, you're earning a personal salary, like you are being paid every month. So it means that it is the amount of money received as an employee. This money goes into your personal account. This money goes into your personal account, right? So, for example, you just have an Access Bank or maybe OP, Money Point. You understand? It has to go to your personal account, right? Now, what you're going to be paying for is your personal income tax, right? And it becomes very predictable and manageable. In this way, you can manage. You just know that. So, for example, they are paying you 150,000 every month. 7% of 150,000 is the tax that you'll be paying, right? So you will be able to calculate it. Is easily managed that way. You understand? And just putting your money anyhow, sending your so that you make a sale and the sale you send it to your personal account. When you do those kind of things, it will be very difficult for you to manage. Now, let me talk about this again. Let's talk about savings rather. Savings. So let's say you are saving money with Fidelity Bank, or you have a business, or you are receiving, maybe it's still part of savings. You're getting return on investment, or you're doing transfers. So money from investments, returns on savings, or personal transfers, where does this go to? Your personal accounts. Now, listen to me attentively. Listen to me attentively. You are not going to be charged, right? You're not going to be taxed if you're saving your money in your bank and you make sure that you're not touching that money. That money is just there, right? You're not going to be charged. You're not being charged for returns on savings. You're not charged for transfers. Listen, they will not tax you for transfers. They will not tax you. So you are exempted from direct income tax. Now, the next one is big lump sums. So for somebody that is always receiving frequent payments, you are receiving maybe 50 million, 60 million, 80 million. Where should this money go to? You should have a holding or operating company account, right? So if you're earning huge amount of money, like let's say every month you're earning up to 10 million, 20 million, or maybe somebody is sending you 50 million, 100 million, please make sure you have a holding operating account, and which is also an LLC. The only thing is just that this is specified, right? Is directly specified for holding large sums of money. I hope you're getting it. Now, the tax advantage for this is that it keeps large sums out of your personal accounts, avoiding undue FIRS scrutiny. So you know that this is where the money is. The money is going to your corporate account. Do you understand? So that way you can manage it. Are we getting it? Are you understanding? If you're understanding so far, let me get feedback. Let me get feedback. I'm going to answer your questions. I'm going to answer all your questions. Okay, thank you so much for the feedback. So let's proceed further, because I want to be done before 8:45. So let's continue the class. So the next thing now is the second tool. We talked about the first two. Now the second tool is reducing taxable income by converting income to non-taxable categories. Now let me explain what this means. Now there are certain incomes that are taxable. There are certain income that are actually taxable by the government, but there is a way to convert it such that you are not going to be taxed. Do you understand? So how do you do that? First, gifts. Gift. So let's say you want to send money to somebody that is celebrating his birthday, right? So when you send that amount of money and you put a description gift there, right, it's going to be considered non-taxable. It's not going to be taxed. It's not going to be taxed. Do you understand? So and also, if you receive money from someone, rather not even send, but if they are going to send money to you, if somebody is sending money to you, you can tell the person to include gifts there. Do you understand? Now let me explain further, because some persons don't understand. The government or your bank, the FIRS and your bank, they don't know what you're using your money to do. All they know is that your money is leaving your account to get something and all that. Do you understand? You are the one that know what you're using your money to do. So you need to add a description. You need to add description of what you are paying for. That way, it helps to synchronize the processes, makes it seamless. You understand? And well tailored, such that you are not going to be affected by the policies. So when somebody is sending you, let's say the person wants to send you 20,000 naira or 30,000 naira, the person should not just send it like that without any description, because if he sends it like that, it's going to be taxed. So what you're going to put there is the person should put gifts, right? Gifts. So that way it's not going to be taxed. Now, secondly, another way to convert taxable income to non-taxable income is transfer. So funds moved between your own account or received as personal transfers from family and friends will not be taxed. Do you understand? So if you're going to move account money from your account to another account, so maybe you have OP and you have money points, or let's say you have OP and you have Fidelity Bank, you want to move money from your OP to your Fidelity Bank, you're not going to be taxed. Do you understand? Also, money income coming from your friends and family as personal transfers, you understand, will not be taxed. But like I said, it's advisable to add a description to avoid any nonsense, any discrepancy, you understand, so that you'll not be affected by tax policy. Another one is savings. I talked about this. Money placed in your saving account or investment vehicles where the principal isn't immediately taxed. So you're not going to be taxed if you're saving. Now, loans you give yourself. Now, please listen to me. There are certain loans that you can give yourself. That's why it's good for you to have a company account, because when you have a company account, you can send loans to yourself and you can include it there. So there are formal loans from your company. You can send from your company to yourself and you can put it there, right? Loan, you can put loan to director. You understand? Loan to director of the company is not going to be taxed. I hope it's clear. So, and you can use that money from your account to pay for things. You can use it to buy things. Let's say you want to buy, television right now for your house. If you use the money from your corporate account to pay for that, you can easily exempt yourself. Do you understand? You can easily exempt yourself from any income tax. So and you just include it there. You can put director loan, you understand, to director or okay. So that's that. I'm coming to the other one, which is expense reimbursement. I'll talk about that. And that way again, for you to convert taxable income to into non-taxable policies or categories is capital contribution. So in this context, Funds are injected into your business as capital and they are not treated as income. Do you understand? So if you want to send money from your account to your personal account or something else, you want to use to purchase something, you can put there as funds injection, or you can just put capital funds injection, something like that. Just put it there as your description. That way they know that this money was used to contribute to the business. Do you understand? Now another one is expense reimbursement. This is money received to cover legitimate business expenses you've incurred. So, for example, now you use part of that money to buy recharge card, to buy data, to buy water, to buy things for the company. You can put it there as expense reimbursement. Do you understand? Put it expense reimbursement, and there they will not tax that amount of money. I hope you are getting it. Now, the last one is director's withdrawal. So what's directors withdrawals? Now, funds legitimately withdrawn by a director from their own company under specific conditions. So you can withdraw money from your company, right? And you can put there as directors withdrawals. Just make sure that you don't do it frequently. You just do it gradually, right? So, for example, now I need 50,000 naira urgently. I can go to my corporate account, you understand, and send money to my personal account and put it there as directors withdrawals. Do you understand? And once I do that, I will not be taxed. I hope you're getting it. So these categories, when properly documented and understood, are explicitly not taxed by the FIRS, offering significant opportunities for tax efficiency. Now let's go to the next tool. The third tool is pay yourself a small salary. Pay yourself a small salary and not your full earnings. So this is a strategy that most successful content creators, influencers, and CEOs use to manage their personal income tax. So instead of you earn 2 million, right? So if you earn 2 million, FIRX expects that your PIT, which is your personal income tax, on the full or 2 million. So they are going to tax. So let me explain now. You earn 2 million. Let's say that you are paid, YouTube pays you 2 million. I'm just using that as an example. 2 million, and it goes directly into your personal account. Eh? So what happens here is that FIRS will charge you. They are going to tax you based on this. So what's the wisdom there? The wisdom is when you have a personal a corporate account, you pay yourself maybe 100,000. You can pay yourself 100,000 as your salary. Do you understand? That way you can control the taxes. You understand, for your personal, or the tax is tied to your personal income tax. I hope you're getting it. I hope you're getting it. So now let's apply everything to both categories. So I'm going to be applying everything, and I'm going to make it more practical now, because I know that some persons might still be confused. I want to make it more practical. So now let's apply this practical. Let's see how it works, and let's see if this will actually give us what we desire. So these new rules and tools can practically be applied to different any scenarios. So let's look at two scenarios. The first scenario is category A, and I know that a lot of persons on this call, they are in category A. So let's say you are earning 200,000 to 500,000 per month, and maybe you have up to 2 million naira or 10 million, 2 million to 10 million naira saved. You have saved this in your account currently, and you want to minimize tax legally, and you don't want to use an accountant. What should you do? So for individuals in this earning bracket with savings, a straightforward approach is often the most effective. So what they should do, what you should do not register a company yet. So if you are earning this amount of money, listen to me, don't register a company yet. You're earning up to 200,000 to 500,000 a month. Why? Because their income level is still relatively low, meaning that FIRS is less likely to scrutinize them intensely compared to larger entities. So if you are earning within 200 to 500,000 per month, especially let's say averagely 300,000 per month, right? Don't register a company yet. So what's the structure here? The structure is you're going to collect all the money to one account and you keep it simple at this stage, right? You're going to categorize income monthly. You're going to put the one that you're receiving as salary, the one that you're receiving as gifts, the one you're receiving from your savings, and the ones you're receiving from digital sales for clarity. Now, you're going to pay PIT on only the business portion of your income. So that's what you're going to be paying. So you're going to be paying for digital sales. You're also going to be paying for, you're going to be paying PIT for salary. But of course, that there are certain persons that are working and the company, the registered company collects their PIT. Do you understand? From their salary. So they will not need to pay PIT anymore. Do you understand? So it is called P-A-Y-E, pay as you earn. So the company, a registered company, will collect the PIT for your salary. That's if your company is registered, they do that. So you will not need to pay any PIT, any tax for your salary. But of course, you're going to pay tax for your digital sales. So if you cannot afford to to get a business account or a company, you can just leave it like this as long as what you are earning is quite low within this range. Do you understand? Now, expected monthly tax. Let's look at your monthly tax. So if you earn 350,000 per month in business, so let's say this is what you earn in your business income. 7% of 350,000 is what? 24,500. So if they report, that's if you report this portion. So imagine 24,500 times 12. That's what you're going to be paying for the whole year. I don't know if you understand what I'm saying. Okay, let me explain better. So if you are earning 350,000 from your business, you're going to multiply 350 times 12. Then 7% of that's what will give you the amount of money. Do you understand? So realistically, most won't owe significant tax because, like I said, gifts is 0% tax, savings is 0% tax, transfers is 0% tax. Do you understand? So except if they're going to change it later. But that's the whole idea of this. Now, the second category is somebody earning 2 million per month, and maybe the person has over 80 million naira saved, and he wants to minimize tax legally. He doesn't want to use an accountant. How do you do this? For high earners with substantial savings, your structure is critical to avoid severe tax implications and FIRS scrutiny. So how do you do this? Without proper structure, what you're going to be paying is FIRS assumes that all 80 million plus 2 million monthly inflows are taxable. Do you understand? They think that all this money now they are taxable. So that's why you should not allow this money to be in your personal account. If you have this amount of money, don't put it in your personal account. You understand? So it's going to require you. They will start calling you for audits. They're going to demand for your source of funds. And if you're unable to do that, give them a positive response or feedback. They are going to freeze your account. I hope this is not what you want to, you're not going to experience this. So I know nobody wants to experience this. So make sure that you don't have this huge amount of money and they are in your personal account, except if this money is saved, except if this amount of money is saved and kept somewhere, you understand, then they won't touch, and that's not a problem. Now, what's the legal solution? The legal solution is simple: set up a company, not for branding, not for business, but for tax protection. That's what I've been talking about, LLC. Now move activities from personal to company. So this is the correct flow. All income enters your company account. So this is the money that is coming into your account. Online sales, return of investments, dollar income, and any inflow. So what happens next? Company pays you salary. Your company pays you salary. So you can select your own salary. You can say company should pay you 100,000 so that you pay 7,000 PIT per month, or 150 or 200,000. So the remaining money stays tax-free inside the company. Do you understand? So legally, because Company tax is 0% if your turnover is less than 25 million per year. Do you understand? Now, the third step is what to do with your 80 million. Don't move your 80 million to your personal account. You already did. So it's very risky. Don't do that. Instead, move 80 million into your company in two possible forms. Option A, capital injection. I talked about this 0% tax. You tell the bank, this is capital for my company. So when you are sending the money, you are telling them that this is capital for my company. And option B, director loan, 0% tax too. So you are saying that you lend the company 80 million. I hope you are getting it so far. I hope you're getting it so far. So if you're having this huge amount of money from, let's say, from 10 to 10 million and 200 million above, make sure that you include this when you are sending the money, when you're moving the money into your company account. Make sure that you're clearly stating it, that this is capital for my company. You understand? Or you are lending the company this amount of money. And you know the best part? The best part is that you can withdraw that same 80 million later in small bits. You can withdraw it as director drawings. I taught you guys this one: reimbursements, loan repayments, and expense payments. And like I said, all of them are 0% taxable. So if you don't have a structure, you're going to be paying PIT on 2 million salary, and of course you're going to be paying CIT, right? So company income tax based on your company, your business revenue, and FIRS will scrutinize your 80 million. You're going to be called for multiple audits. Your account might be blocked if your source is not clear. So, but when you have a structure, the highest you're going to be paying, if you're paying yourself 150,000 salaries, 10,000 500, your company will not pay any tax. 80 million moves legally tax free. Nobody's going to suspect you. No audits, no accountant needed. I hope you're getting it. So now let me answer some of the questions that some persons have been asking so far. What's time? So I have 10 minutes more for this so that I can just proceed. Now, somebody is asking, will my 80 million savings be taxed? So if I have 80 million savings, will it be taxed? No, the Federal Inland Revenue Service does not tax. They don't tax bank balances. They will not tax your bank balances. They don't tax savings accounts. They don't tax already earned money. They don't tax money you are not actively receiving monthly. They don't tax that. So what FIRS primarily scrutinizes is your monthly inflows, not the amount that you already have stored. So if you have a certain amount of money in your account currently and is there in your savings account, do you understand? FIRS have no business with it. So it means that your 80 million naira is safe. However, the real risk lies with new inflows. So if you are still getting new amount of money coming into your account, that's where we will now have a problem. So risks from undocumented inflows. If your personal account consistently receives 2 million naira monthly, random lump sums, payments from customers, transfers from multiple banks, FIRS may assume it's undocumented business income, even if it's not. This is why proper structure for new inflows is crucial. You need to have a structure for the amount of money that is coming into your account monthly. You need a better structure. So, and that question is, will my 500,000 naira salary and 5 million savings be taxed? Yes, you only be taxed on your salary if employer deducts PAYE. Are you getting it? I will answer your questions. Don't worry. Let me just finish this. If employer deducts payee, it's called payee, or if it's from your business. So if you will not be taxed if your employer deducts this from your salary. Do you understand? You're not going to be taxed. You're not going to be taxed if it's from transfers, gifts, savings. You're not going to be taxed. Do you understand? All right. So it's taxable, your salary, right? That's what will be taxable. Your salary will be taxable. What else? Okay, so that's it. Your salary will be taxable. I think I've answered that. Answered that. Yes. Okay. Now, transfers you make to yourself or so legally not taxable. Which ones are not taxable? Transfers you make to yourself or between your own accounts. Do you understand? So if you send money to yourself, you're not going to be taxed. Gifts from family or friends. If your family or friends send you gifts, not going to be taxed. Money you're already saving from your old earnings will not be taxed. Reimbursements. So somebody refunded you for an expense. So let's say that somebody was owing you an amount of money and sends that money to you and puts it there, refund or reimbursement, you're not going to be taxed. Loans you give or receive will not be taxed. Old money stay in your account, I've already talked about this. Withdrawals and deposit of already taxed money. Now, FIRS cannot legally tax gifts or transfers. I've talked about this. So now, and that question is, will paying rent for my personal account be taxed? No, you will not be taxed for paying rent from your personal account. Rent is a personal expense, not income. So tax applies only to money entering into your account, not money going out. Are we getting it? I hope I'm simplifying it in the best way for you to understand. Are you understanding? Guys, are you understanding? Are you understanding? Okay. So let me continue. Let me continue. Okay, thank you for the feedback. I'm getting feedbacks that people are understanding. Okay. In Busayo says, yes, I'm getting it. Okay, that's good. That's good. That's good. Okay. So let's continue. So you're not going to be taxed for your rent. When you pay rent, you're not going to be taxed. So now, what transaction descriptions can I use to avoid being taxed on personal spendings? What transaction descriptions can I use? So what should you use when you are sending money or when somebody's sending money to you? That's what I'm trying to explain. When somebody sends you money, they can put gifts, they can put support, they can put allowance, they can put contribution, they can put refund on the description, loan repayment, savings transfer, personal funds. So when someone sends you money or when you send money to yourself, you can put personal funds. When you send money to another person, you can put gifts, you can put allowance, family support, contribution, loan to this person, refund, reimbursement, savings, personal transfer. When you move money between your own accounts, so when you move money between your own accounts, you can put your own account transfer, savings transfer, personal funds, money movement, self transfer. When somebody repays you, the person should put refund, reimbursement, loan, repayments. So please avoid these narrations, avoid these descriptions. Sorry, where is this stuff? Avoid these descriptions when somebody is sending you money. They will trigger tax flags. One, payment received. Don't put payment received. Don't put services. Don't put business. Don't put sales. Don't put client payments. Don't put income. Don't put professional service. Tell them to not to do that for you. They should not do that for you. Do you understand? Okay. Now, legal tax minimization for crypto. Now, this is for people that do crypto. I hope people that do crypto on this call. So this is for those that do crypto. Tax minimization for crypto P2P vendors. So crypto is not taxed. Crypto is not taxed. There is no official law taxing crypto trading activities like buying, selling, or P2P arbitrage. The tax trigger is fiat inflow into your bank account, not the crypto itself. So let's say you make money from crypto and you send that money into your account. That's when you're going to be taxed. So another thing is volume, not crypto, that triggers taxes. High transaction volumes, let's say you make 5 million today, 22 million next week, automatically flag your account as an undocumented business, leading to freezes, compliance reviews, and Fox tax assessment. So you need to know that it is not actually it's not actually crypto, it's your volume. And legal structure offers protection. So a proven 100% legal and tax efficient structure exists. It is widely used by a high volume financial operators to manage large inflows without triggering excessive taxes or scrutiny. Now let's look at the bulletproof legal structure, LLC and corporate accounts. Step one, set up a limited liability company, LLC. So this is what you need to do. Register your company, right? Register your company. It could be digital service, payment solution, fintech, e-commerce. Please avoid words like crypto or blockchain in your registration. Don't include this. You can open a corporate bank account, Money Points, Wema. You can open a corporate bank account. Then the next thing is you can also treat crypto sales as inventory trading. So when you make sales on crypto, treat it as inventory trading. So it's very necessary you do this too, because this narration. So for example, you can use merchant payments, customer deposit, wallet funding, trade settlement, service payment. So these narrations correctly categorize your transactions and do not attract personal tax. Step four, you only pay minimal tax on net profits, not total inflow. So, so consider a month where you received 550 million from buyers, paid 49 million to sellers. Your real profit is 1 million. I don't know if you understand. For somebody that is doing P2P, so let's say you receive 50 million from buyers, you paid 49 million to sellers, your real profit is 1 million. So why banks, what they are seeing is 50 million in activity, right? That's what your bank is seeing. What FIRS only taxes your 1 million profits. This is because crypto buying or selling is treated as what cost of goods sold rather. So they will only tax your 1 million. They're not going to tax you your 50 million. Do you understand? Ah, wow, 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 wow. Are we getting it? 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 Should I stop here? I still have a lot of things to cover. Should I stop here so that you guys can ask your questions? Or should I just complete everything? Somebody should drop a message in the comment section. Let me hear from you. So I think I've answered that person that talked about crypto, that is a crypto trader. I've 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 answered your question. I've answered your question. Okay. Can I use a personal account for your P2P? I will advise you to get a company account. I advise you to get a company account. So now, step five, withdraw your profit legally without an extra tax. So after accounting for business expenses, you can legally extract your profits through director salary. So you pay yourself a very low salary, subject only to 10% withholding tax at company level, directors loan repayments. I've talked about all these ones, expense reimbursements. So let's go to another one. I want to go to another one quickly. Okay. Okay, so this is another question. This is from somebody that does forex or dollar earnings, how to minimize tax. For those earning in foreign currency, the principles of business structure remains paramount. One, like I said, use a business structure LLC. So it means that you have to move all your forex earnings into your company account, and you can get a DOM account. You can get a DOM account. So make sure you do that. Separate your business income from your personal income. Classify your income correctly. Treat forex trading as business revenue, not as personal benefits. Please, very important. Deduct business expenses. Extensively claim all allowable expenses, including software, internet, subscriptions, education, trade fees, capital expenditure. So deduct your business expenses. Next is balance salary plus draws. Pay yourself a modest salary. I've talked about this. Then your VAT VAT recovery. If buying VAT applicable digital tools, the company can recover the VAT. You can also recover VAT if you are buying, if you are using VAT digital tools, you can also recover your VAT, and make sure you document everything. Um, so for somebody asks PIT for 200,000 naira monthly salary. Is it annually or monthly? Personal income tax is assessed annually based on your total yearly income. Do you understand? However, in practice, your employer will likely deduct tax monthly from your pay as you earn. Do you understand? So the person that employs you will keep collect. That's if the company is a registered company, they will collect this amount of money. So you will not need to pay your tax and PIT. Do you understand? Okay. Is personal income tax net or gross? Personal income is calculated on your taxable income. So it's based on your taxable income. And this is effectively your gross income minus any allowable deductions and exemptions. Do you understand? So let me explain better. So for instance, if your gross salary is 200,000 naira per month, a part of this might not be taxable. Do you understand? So if it falls under specific exemption rules, if you make qualified contributions. So, for example, there are certain rules for people that do real estate, right? There are certain rules for people that do pension, and there are some other tax rules. So that's the only reason why some part of this money may not or might not be taxable. Do you understand? How can a civil servant legally minimize tax? A civil servant can legally minimize tax by contributing, which I just talked about, to pension retirement savings. So you can contribute to it. You can claim legitimate non-taxable benefits. Do you understand? So you can utilize tax exempt allowances from your workplace. Do you understand? Such as transport or housing. So, for example, now they are giving you special benefits like transport or housing, right? So those ones, those amount of money that are coming in based on this transport, housing, those benefits, they are not going to be taxed. You are exempted from that. Also, you can have a side business LLC. So if you have a side venture, maybe you are doing freelancing, affiliate marketing, and make sure you have an LLC. Then move the business money into the company account and carefully pay yourself salary. Crypto vendor, tax on 100,000 naira inflow versus 55,000 naira profit. Okay, let me see whether I understand this question. Okay, for crypto vendors, personal income tax is based on your actual profits, 55,000 naira. Okay, I understand. So let's say your profit from the amount of money that comes in, 800,000 naira, right, as a crypto vendor, but the profit you make is 55,000 naira, right? So this is what you'll be taxed, the actual profits, not the gross inflow and outflow, which is 800,000. So make sure that you can properly document everything. If you document it very well, they're not gonna, this is what you'll be taxed. But if you don't document it very well, this is what you're gonna be taxed. So you cannot simply record 745,000 naira as expenses without verifiable proof. Are you getting it? So you won't just write this thing and put it as verifiable proof. Don't do that. Do you understand? So um because the Federal Inland Revenue Service requires invoice or receipt for all claimed expenses for crypto payout, you will need to show clear records. And that reminds me, I have a smart tax tool that helps you to automatically record your taxes, right? So you can record in a tax calculator. It can help you do that. So let me just say this before we proceed further. Um, this is how it works. So you can see that you can put in your income here. All you just need to do is to record your income, your expenses, right? Your and the task calculator will help you to do it. Once you put in your business income, your expenses, the salary paid to yourself, your net business, it's going to calculate your net business profits, your company turnover. It will put it there. Then it will show you how much you're charged, or how much you're gonna pay as taxes. Do you understand? So it's gonna show you that. So for example, PIT, this is how much you're gonna pay, 7,000 naira for that month. So this stuff, all you just need to do is just plug and play. Just put in your details and it will help you calculate this. And it will also give you your monthly summary. It will give you a monthly summary, and you can also use this as your dashboard. When you have a record sheet like this, I mean, verifiable sheet like this, there is nothing that will make them to disturb you. Do you understand? And I did it in such a way that it can help you to calculate your tax summary. It calculates it for you. So you can see, as I clicked on this, it calculated it for me. It also generates monthly summary. It can generate your monthly summary, right? So it can also it also generates tax reports where you can download it. You can download your tax reports and all that. So I mean, if you want to get that stuff, it's just for 5,000 naira only. You can get it if you're interested. It's not compulsory, but you can get it. If you need it, just reach out to me and I'll give you access to it. So let's continue. I'm almost done so that we can leave here. This is 6 minutes more, and I will just take 2 questions. I will call it a night. I hope you're getting value from this webinar. So make sure that your documents are verifiable. Now, for somebody that has a franchise, for a franchise owner, POS plus bed company commission setup. So what it means is that commissions come into your account. Some of that money is not yours, and you pass on parts to punters, right? So the amount that this thing is not yours, you still pass that money to punters, bet punters. You also run a POS outlet. That means there is an inflow and outflow of cash. So what do? You use a company, LLC, for all your business flows. Everything, commissions, POS, inflows must go into your business account. Record pass-through money carefully. Make sure you record the money, the amount of money that is coming in. So money getting into your account that is not your profits, that you will send to punters, please listen to me, must be treated as what? Liability, not your personal income. So make sure you note that. Also, only tax the margin. If you act as an agent, tax only your commission, not the full punter pool. This thing is self-explanatory. Do you understand? And make sure you keep your clear records, keep your records, pay yourself properly. I've talked about that. Number 7, what if somebody mistakenly pays me money and I refund them? With the government tax that as income, or can I record it as expense? You should record it as refund or reimbursement, not revenue. Do you understand? So if somebody mistakenly pays you money and you want to refund them, make sure that you put it there as a refund. So use bank narration like refund, mistaken payment, or reimbursement to the person, or return of funds. Do you understand? If documented properly, bank message plus your accounting record, FIRS will not treat that as taxable income. Always issue a formal refund. You see it, and keep a record. Make sure every one of you must keep your bank statement. Make sure that you always have access to your bank statement every month, because from your bank statement, that's where you're going to get every transaction going on in your account. So the 8th question is this: are we still on this call? I'm seeing a lot of persons leaving, and this thing actually concerns a lot of persons, but people are leaving. Okay, it's fine. I will do my best. I mean, nobody's paying me here on this call. Nobody's paying me, but I'm just doing my own best to serve humanity and to see how I can help out, because I know what it cost me to get this information, and because of I have lots of people that are connected, right, in this tax, I mean, as tax agents. So that's why I was able to get certain information. But let's proceed for those that will stay. For freelancers using platforms like GigPay that only allow personal bank accounts linked, what's the point of having an LLC plus company account? So Good question. It's tricky, but there are reasons, even if not all income flows directly into the business account. So what happens is that you create legitimacy. Having a company means you can invoice, issue receipts, and show FIRS that your business is formal. That's why you need a company account. Partial routing, where possible, encourage some clients to pay into your company account. So for example, you have a foreign client and the person wants to pay, make sure that they pay into your company account. You understand? So bookkeeping structure, even if all the money hits your personal account, you can immediately book it in your company books as business income, then pay yourself salary, then draw from your company. Do you understand? Tax planning. The reason why I'm not talking much about this is because I've explained some of these things before. Now, your company holds retained profits. Over time, you can move earnings from your personal account into your company via capital injection. I talked about this one, capital injection, and through loans. Like you want to loan your company, you can do that. And this is for future business spending. And you can also retrieve this money back. You can retrieve this money back by using reimbursements. When you scale, having a company is critical for other benefits, VAT, impute credit, loan, investments. So linking is income. Long term, make sure that you get an LLC. That's just the summary of it. How do I keep myself protected from excessive tax? I've talked about this. Use corporate structure, pay yourself a salary, right? Keep meticulous records, use e-invoicing, use approved retirement pension schemes, use VAT recovery, capital allowances, capital injection, always file your correct tax returns, keep a small reserve in business to pay future tax. I mean, these things I've talked about them. Starting freelancing next year with hopes to earn a lot. Will tax be taken on a savings account that has over 10 million in it? So this is somebody's question, that he has saved up to 10 million in his savings account, but he wants to start freelancing next year. Will they take any tax from me? I've talked about this too. No. If you have 10 million in your savings account, it does not automatically trigger taxes. What matters is how the money got there. Is it business income, gifts, savings, transfers? How did the money enter your account? If the 10 million is all from saved up after tax business earnings, then no additional tax just for holding it. Do you understand? So if it's saved up after tax business earnings, then they won't tax you. If it's new inflow, e.g., 10 million comes in this year, then FIRS will question, especially if large monthly deposits. So make sure you document it. Also, I've told you before, use capital injection or loans to move the money to your company later. So make sure that you need an LLC. Move the money to your company later. With a business name, not LLC, can one legally minimize taxes? No. The answer is no. No. Let me not just go through this. You need an LLC. You cannot legally minimize taxes, right? If you just have a business name. No. The structure LLC you talked about for creators, can somebody not yet earning 6 figures naira on salary role use it? Yes. Even if you earn 200,000 naira per month or less, you can register an LLC today. You may not pay much CIT, that's company income tax. If your business is small, have an LLC. Having an LLC gives you professional legitimacy. You can scale your business, and it also allows you to separate your business money from your personal money. Being on salary and doing freelance, you can run your freelance income through LLC, pay yourself a salary, and you can benefit from the tax planning. Okay, so this is the last questions, and we'll call it a night. As a medium-sized provision store, that's physical business, how do I legally minimize tax under the same questions? Register LLC, use proper expense tracking, right? Inventory, rent, salaries, electricity, transportation. I've talked about this. Claim VAT, pay yourself salary plus director's draw. use capital allowance, buy store equipment under the company. So you use the company's name to buy some of these things so that your taxable profit goes down. You understand? Document cash flow very clearly. Will tax be based on different accounts or just total balance? Tax is not directly based on balance your accounts. It is more about inflows. We've talked about this too. It's about inflows. Then on BVN, FIRS can cross-check inflows with your BVN. So they use your BVN to check the amount of money that is coming in. And all your major accounts are usually linked to your BVN. So high volume, irregular inflows are visible. So make sure that you have a proper account structure so that you will not have personal account issues. So this is where I'm going to be stopping. If you have a question, raise up your hand. I'll just give two persons the mic so that you can ask the question. And once you ask your question, I'll take two questions and I'll wrap it up. Okay, website for SMEs. You can ask your question or mute your mic and ask your question.
All right. Good evening, sir, and thank you very much for this premium information. Thank you so much. Okay,
You're
so
welcome.
my question is, I'm into digital products and also into e-commerce products. Like, I sell digital products. I also sell physical products online. So now, but I use personal account, for all the payments that I receive. I use personal account. So my question is that because uh, at least let me just give you a rough estimate. Like, okay, in a month, I do receive like 800K, just at least on a minimum, like 800K in a month. And meanwhile, I'm using a personal account. So what I wanted to ask now is that concerning the tax, um which part am I going to be taxed on? Is it that okay, the money that is coming from, let's say, the digital product, people paying for that digital product, and the payment from the e-commerce products, is that where I'm going to be taxed? Because it's a personal account, for loan, everything is used under that personal account. So I want to get clarity. So, like you said, that okay, I need to file a report. So I want to get it clearly that okay, if I'm filing a report, okay, so where I'm going to be taxed now is going to be based on the money received for the digital products and for the e-commerce product. So that's my question.
You've already answered yourself. So the thing is, if you're using you're earning at least averagely 800,000 naira per month, and that's a huge amount of money because FIRS the cap, right, they give for people that are like personal owners, you understand, not companies, not company owners. So is once you earn less than 800,000 naira, you're not going to be taxed. That's per year, not per month. So if you are earning up to 800,000 naira per month, you are earning a huge amount of money, and it requires that you own, at least you have an LLC, right? So that way, when the money is coming into your account, you can clearly document it that this money, oh, this is what is coming in for. You understand? Yes. And the beauty of it is what the advantage of having an LLC is that when the money comes into your account, right, you can reduce the profits, because they're going to charge you based on your profits. They don't charge based on inflows for companies. They charge based on profits. So you can reduce the amount by expenses, some non-taxable expenses, which I talked about. Do you understand? So there are some expenses that will not be taxed. For example, now let's say you want to reimburse yourself. You understand, or you want to pay for certain things for the company. You understand? So it is advisable for you to have an LLC because that way you can control it yourself. Do you understand? So when I'm putting in, when I'm spending money, I can put a description there. I'm using it for this. I use it for loan. You understand? Do you get? So I talked about some of those descriptions there. You can maybe go back to the videos and watch. I mean, the video later when I record, when I upload it, you can watch it again. So that way you can. But if the money is coming into your personal account, you're gonna be charged. You're gonna be taxed rather on your personal account. The inflow that is coming with digital sales, e-commerce, fine. They're gonna charge you for it. Do you understand?
Okay. But under the this personal account, I can be able to maybe this month I can specify, okay, this one is loan, this one is refund. They will not charge me based on those.
Is it the personal account you're
Yes,
talking?
personal account.
Like
Yes,
if somebody is sending money into your account now, okay, let's make it practical. Somebody bought a digital product from you. Do you expect
yes,
that the person will put on the description gift, or the person will put one description like that that will make them not to tax you? No, the person will not put any description there. So I'm sending you money now because of I paid for your cost, right? What it will show there is that I mean, you've received the payment. There's no description, so it's going to be difficult for you, except if you're going to be telling the people that are purchasing the course from you that okay, when you're about making sale, write this description so that you will not be taxed. And that one you cannot really control it. I don't know if I'm making
yes,
sense.
yes, I understand.
So the best for you, I don't know, getting we do LLC. I mean, I have a couple of people that do it around me. To get an LLC for somebody that that is gonna aim, you are aiming 1 million per capital share is just 60,000. And I believe that after this year, they're going to increase some of these things, and it might even be difficult to do some of them. So for somebody that is running a business, see, to be on the safer side, just get an LLC. That's my advice. That's my
Okay,
advice. I hope you got it.
okay, okay. All right. Thank you very much, sir.
Yeah, you're welcome. All right. One more question. Any other question? Any other question? Any other question? Adejoke, you have a question? Val Waka, you have a question? Any other question? Please be quick so that you can leave. Busayo in your lua, you can unmute your mic. Ask your question quickly. It's
Thank you
already
very much.
late.
Yes, thank you very much for this session. We really appreciate it. So, sir, I actually just wanted to check. Can we
Can you be
have
more
a?
audible?
I actually wanted to check with you. Is this session recorded, and can we have access to the recordings?
Yes, 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 yes. I'm gonna send it to the community channel.
Thank you very much for that.
You're welcome. Okay. More questions? Anyone? Okay, it means that I did justice to this. I explained everything. So um okay, somebody is asking. So let me just go to this thing. Somebody is saying, hope we can record CBN electronic transfer fee and other bank charges can be recorded as expenses and untaxed. Yes, actually, expenses is not taxed. You will not be taxed for your expenses. You only be taxed for inflows. Do you understand? And like I said, there is a way to bypass some of those inflows. So if somebody's going to send money to you, you can tell the person to put loan, the person can put reimbursement, the person can put gifts. Do you understand? But make sure that the money is not just being sent frequently, because this how the money will be sent. I mean, you'll be receiving the money regularly, that it's going to look suspicious. Do you understand? So it's wise for you to just take it careful, just do it gradually. That's if you're sending money to your personal account. And if you're sending money from your account to another account, you're not going to be taxed. That is your own account, though. It's not going to be taxed. I hope I've answered your questions. Okay, guys, let's call it a night. Thank you so much for joining. I hope this class was valuable to every one of you. And if it was, I believe that I will get feedback from you guys. So for those persons that want to do LLC, I do it. You can just make requests there, and I would connect you to one of my team members to guide you. So you're welcome. All right. Have a lovely night rest, everyone. You're welcome, guys. Take care of yourself. Thank you for staying till the end of this webinar. A lot of persons left. We started with over 30 persons, and now we are just few remaining. Thank you so much, guys.